On this episode of Transformational Thinkers with Sara Sheehan, I'm joined by Nick Jain, an AI evangelist and CEO with a distinctive approach to scaling businesses. Nick pulls back the curtain on how autonomous AI is reshaping back-office functions, unlocking new levels of efficiency for finance and HR teams. He shares his philosophy of making only positive, incremental decisions and dives into how data-driven insights are moving the needle for organizations of all sizes. Together, we explore the evolving role of AI in business, the challenges of leading through change, and what it truly means to make thoughtful, calculated bets as a leader. You'll hear firsthand stories about how building dynamic applications, the power of apprenticeship in developing emerging leaders, and why critical thinking, not just embracing the latest tech, is the true edge in today's landscape. Whether you're a CEO, a leader navigating change, or curious about the practical power of AI in business, this conversation is packed with insights to challenge the way you think about leadership, technology, and the future of work. Nick, I'm so glad to have you today.
Thanks for having me, Sarah.
What is the earliest signal that you watch for that tells you a company is about to stall before the numbers reflect it?
I think when you see people who are not working really hard, because that means there's not enough to do. And that's usually a leading indicator that stuff is going to head southwards. Because when people are busy, they're working, they're motivated, that means there's stuff happening, there's stuff for them to pursue.
You've shared with me that in your current venture, you are an AI evangelist developing autonomous AI infrastructure models for back office functions, which I understood to be HR, finance, and mutual funds. Is that correct?
Yes, but we're really focusing on what are the types of areas where you need smart, intelligent people doing work that is expensive and somewhat repetitive, and people make mistakes. And so the first line of business that we launched was to do this for the finance function, right? Wouldn't it be nice if everyone had a Fortune 500 caliber CFO working for them, except without having to pay $500,000 or $1 million a year? Mm-hmm. So that was our kind of first productization of this philosophy. But we're also starting to add services in HR is another one. So hiring is a very laborious process for everyone who's ever done interviewing. It requires lots of coordination, both for the interviewee's part as well as the interviewer's part, as well as marketing. These are all functions where you need smart people, but technology enables us to do this much, much more effectively, number one. Number two, much more cheaply. And number three, typically at a higher quality as well. And that's really cool. Like going back to that insurance example I gave, human beings wouldn't think about, hey, is the CEO missing an insurance policy that's going to protect his or her house, right? But our good technologies, whether it be ours or someone else's, do that much more effectively.
Mm-hmm. What action do you normally take in a situation like that when you start seeing that behavior?
Look, I think a company can end up in trouble due to basically two types of things. One is external. The market conditions have changed. So whatever product or service you're selling is perhaps less relevant in that world. Or something internal. Maybe the way you're executing the people you have or what they're working on is not effective. On the latter, if it's an internal problem, that's something you can kind of go solve. If it's an external thing, you can't change the world, unfortunately, right? As a typical business owner, even of a Fortune 500 or Fortune 50 company. Mm-hmm. So in the event that it is an external thing, the right thing to do is honestly think about selling your business and making it somebody else's problem. If it's internal, then you need to go change your business operations really quickly before it starts showing in the numbers, because by the time it starts showing in the numbers, you're in trouble.
Mm-hmm. Nick, very interesting comments. If you had to compress your scaling philosophy into one operating principle CEOs could apply immediately, what would it be?
Make only positive incremental ROI decisions every single day. Basically, every time you spend $1, do you get more than $1 out, literally at the dollar level?
Mm-hmm. You really are financially performance motivated.
Yes, but not for money's sake. I think that's the way humans compound progress, right? If the reason, for example, our knowledge is compounded over generations is we built on things, right? We learned, a little bit of molecular biology that allowed us to make medicine, that allowed us to cure human beings. And the same is true in financial markets, that if you spend $1 and you only get 90 cents off, you've not made not only yourself worse off, but your kids and all of humanity. So you kind of need to compound capital over time to make everyone better off.
Fascinating. What is your toughest internal leadership moment that you've navigated? What made it tough and what did you learn from it?
So I've stepped in several companies where there was strong leadership who'd built these companies in the past, and I was an outsider. And I was coming in with a mandate from the board to do things and achieve certain results, but I had very different, not only objectives in what I had been told to do by my board, but also my personal style is very different than some of the leaders that I was either replacing or supplementing. And that's a really difficult thing to do when you are stepping into someone else's shoes and they may be a beloved leader that somebody that lots of people look up to and like, and you're all of a sudden being tasked as do something very, very differently. And that means that, people won't initially like you for being different, right? So that's a personal challenge, right? Because everyone wants to be liked, but especially as the kind of CEO of a company, you have to do what's right for the company, which means like making unpopular decisions if it's going to save more jobs, if it's going to create more value for your employees, for your customers, for your shareholders over the long-term horizon.
Yes, I do know that many people struggle with being in a position when they know they're not liked and taking that hard role of being a decisive leader to really change the trajectory of the company. It is a truly hard position to be in, no question. No question.
Everyone wants to be liked, right?
Everybody wants to be liked.
Everyone except maybe psychopaths want to be liked. But sometimes, unpopular decisions are the right ones. And I'm not just talking about firing people. It's like, we're just going to do this thing differently than the way we've done it. Change is hard. People don't like change. And, the person causing the change is often the target of that dislike or that frustration.
Change is always hard. Have you ever chosen long term cultural strength over short term financial performance? What did that decision cost and what did it earn?
So the answer is no. I believe culture is what arises to fill in the gaps between processes and philosophy of an organization, right? And obviously the philosophy of a nonprofit may be different than a government, may be different than a healthcare, may be different than a bank. But I really believe as a leader that I need to drive results every single day, and that adding up a whole bunch of short-term successes compounds into long-term success, and that culture fills the gap that kind of numbers don't describe. So rather than prioritizing culture for its own sake, I think of it as kind of glue that naturally arises as an organization is performing well on a day-to-day basis.
Interesting. What do you believe your competitive edge as a CEO actually comes from? Is it pattern recognition, emotional intelligence, operational rigor, risk appetite, or something else entirely?
I think it's from quantifying risk. So you talked about risk appetite. That seems to imply, taking on more risk is good. So that's not my case. I don't care whether something is low risk or high risk. I think about it almost as a gambler would. Is this a good bet to take? And quantifying it, not just taking it on gut feel. So I think as a leader, I've been very effective at figuring out which bets are worth taking. Are they positive expected value? How much am I paying? How much could I win if I win the bet, and how much could I lose if the bet goes sideways? And I think that's a thing a lot of leaders don't do. They tend to either avoid risk and tend to have low risk appetite, or they tend to take risk based on gut feel.
Right, without the analysis required to actually show what it is. Fascinating. What is a leadership habit that you practice that most CEOs underestimate?
I think I just read a lot. And I think, when you are in a senior position at a company or organization, you spend a lot of time working really hard on just keeping the organization afloat. And then you have your family, your community, your church, or whatever the obligations you have outside of work, which means you often don't get to sit down and just read for reading's sake. And I'm not talking about the financial news, but reading a technical book or a novel. And I think I spend a lot of time doing that because A, it de-stresses my mind, but B, I learn things over time that I can pick up and apply. It could be a way of dealing with people that I see in a novel, or it could be a technology that I read about 15 years ago that is now relevant today.
And so tell me what you're reading right now.
Sure. So I'm halfway through Moby Dick.
Wonderful.
3/4 of the way through Paradise Lost. Phenomenal book, by the way. Even as a non-religious person, Paradise Lost made me like, wow, this guy was inspired by God when writing it. And then I am reading some technical commentaries on Claude Code for how to use it more effectively as a technology in AI implementation, or AI orchestration, I should say.
Very interesting. On the latter, tell me what you're learning in those technical works that you're reading.
Sure. So Claude Code is an AI tool that's a big black screen, and you talk to it like a chatbot, but instead of like ChatGPT or the tools that you use in your browser, it does stuff for you. It creates website, it sends emails, like it does things in the digital world. And I think the biggest thing I've learned is there's a lot of kind of neat things you can do in setting up Claude Code to be more effective, to be much, much more effective. And a tactical example of this is there's this thing called Claude.md. It's a little file you create, just text, and you just tell it what the context is. Say, hey, you tell it a bit about yourself, like, hey, this is the type of person I am, this is what I'm good at, this is what I'm bad at, here's my writing style. And it absorbs that every time you have a new conversation. So if you go tell it to build let's say a weight management application, it's going to think about, hey, Nick is a 39-year-old guy. He's starting to get past the age where he has the 20-year-old guy's metabolism. This is probably why he wants a weight management app.
Fascinating. Are you writing your own applications for clients?
Exactly. Well, not multiple applications for clients, but yes, we have one application to serve we run a tech-enabled fractional CFO business, and we wrote an application that is designed to be both used by our customers and clients as well as by ourselves. And it just kind of does a lot of the analysis that we would do kind of every month in our work, except it does it automatically. And we were really excited to write the code ourselves, obviously with AI assistance.
That's very exciting and transformative. Tell me, the application that you've created, does that serve only one industry or does it serve several industries?
Sure. So what our business line is we are analytically oriented CFOs. We help businesses figure out how they can be more profitable, which is different than, let's say, accountants or tax people. We focus on, hey, how do you make your business more profitable, whether that be cutting costs or raising revenues or de-risking your business in some way. Our application, what's cool is it kind of applies to any industry and almost any company size. It ingests data in whatever format you have it. It could be ugly PDFs, it could be beautiful Excel files, it could be your direct connections to your accounting system. And it thinks the same way a great world-class CFO would be, almost like the abstract question, how do you make your business better? What should I do today? And that's what it does for our clients. And again, this is all work that a human being could do, but it would take a human being, 30, 40 hours per month per customer or per company. And now we can do this in seconds at scale for any company. And like a fun example is one of our clients is a Hollywood talent agency. I know nothing about Hollywood. I know nothing in talent agencies. And our technology was able to figure out that there was an opportunity for them to make $1.5 million more just by reimbursing their customers for things like makeup.
That's fantastic. And so your app connects to all financial operations?
Really any form of data. Like our application, what it's trying to do is figure out how to make your business better. And it could be doing that by optimizing your warehouse operations or your ad agency production or your Google or Facebook ads. It loves data, and it loves trying to figure out, hey, how do we make more money for you using this data?
I think that's fascinating, Nick. You are working with clients at scale at this point, correct? Large.
Our typical clients on what we call our consultative services side, where they actually talk to me or my business partner, tend to be between $5 to $50 million in revenue, so mid-sized enterprises. We recently launched about 2 or 3 weeks ago a software-only version where you're not, you don't get the, benefit or curse of talking to me, but we can offer that software at a much cheaper price point for a couple $100 a month.
That's fascinating.
And that is intended for that kind of $1 million client.
And so does that have a particular name, the subscription model?
It's just on our website. So our website is Eagle Rock CFO, and there's a big sign-in button where about half of our application we give away for free and half we paywall. So I don't know if the application is the name, but our firm's name is Eagle Rock CFO, and the application is available in 3 clicks on our website.
Fantastic. Thank you so much for that, because that's pretty revolutionary what you're doing. And I hope people find you just from this conversation.
Yeah, I should say, I just want to emphasize about half of our application is totally free. So, which is kind of cool because there's a bunch of graphic and analytics that you would normally have to pay somebody $1,000 a month to do. And we just give that away for free because it costs us nothing to deliver it.
What other great learnings have your clients found by having access to much more detailed data?
Here's a fun one that no one thinks about: insurance policies, right? Every typical business owner is worried about, hey, how much stuff did I sell, whether that be service or whether that be lumber or burgers, and how much did it cost me and how much profit did I make? They don't think about what's called latent risks in your business. And so for one of our clients, we discovered they were missing a bunch of insurance policies, most importantly, what's called directors and officers insurance, which is what you need. If you get sued, normally they can only come after the company. They can't come after your personal house or your car or your kids' toys or the other assets you may have. D&A insurance protects you for when they try and come after you personally. And any business that's more than a couple $1 million, or actually probably more than $1 million of revenue, definitely needs D&O insurance. It's cheap, but it's important because it protects your house, and that's worth paying $1,000 or $2,000 a year for.
Definitely.
You don't want to lose your house in a car because something goes wrong in your business. I don't.
That is for sure.
So yes, we discovered this, and it's something that you would not have thought about, right? Because a typical business leader, a typical CFO is focused on revenues, profits, costs. They're not thinking about, hey, what happens if I get sued and the CEO loses his house or her house? That's and our technology figures stuff like that out. Without us thinking about it, which is so cool.
That's a competitive advantage. This is a dynamic software where it's constantly looking at data. It's not a one-time snapshot, correct?
Correct. Yeah, it's looking at data. Basically, you're supposed to log in kind of once a week, hit the refresh button so it runs all your analysis. Go and 2 minutes later, it gives you like, hey, here's what you should do this week. Again, no different. It's intended to simulate without obviously a fake video avatar. What it would be like if you had a great CFO sitting across the office from you, that you could walk into his or her office once a week and say like, hey Mike, or hey Jessica, like what should we do this week?
That is a tremendous advantage for so many companies that are in the scaling process. I just can't imagine how it could transform a business that's not even thinking about what they could do differently today. And if they have a tangible to-do list that is actually connected to their business and their financial operations, that's a pretty phenomenal thing, Nick.
Yeah, we're just entering this wonderful world where, I hate using the word democratization because I think it's overused, but we're entering a world where these amazing technologies are available not just to $1 billion businesses, but to $1 million, $100,000 businesses, right? What's the old joke? Bill Gates had he had like a Siri-like or Alexa-like device in his house in the late 90s. But for the rest of us, we didn't get Alexa till, 2020 or 2016, 25, 30 years later. And that same transition is happening for lack of a better word, human advice and human intelligence, that you could only hire a great CFO or a great CEO if you were a Fortune 500 company. Today, you can get that level of intelligence and insight for running your home office business.
And those businesses may still need a fractional CFO, but it could make them incredibly productive. When working with today's individual contributors and emerging leaders, how do you win their hearts and minds? And what approaches are the most effective?
I think that different people have different personalities, right? Some personalities are going to naturally click. I'm going to click with some individual contributors and junior people, and for others, I'm not going to click. My style naturally leans towards kind of two things. Number one, being very analytical, and number two, focusing on teaching skills. So I really try and, especially with kind of younger folks or people earlier in their careers, trying to emphasize like, hey, here's the right skills that I'm going to actively teach you. So you're not going to absorb these skills just by osmosis and being around, but I'm going to sit down and try and teach you this is the right way to do things. And I think that's something that has the active apprenticeship model, I think, has been over time lost a little bit in our workforce, where you're just supposed to absorb knowledge by being around other smart people rather than your boss sitting down and teaching you something. So I try and actually do that very actively, partially because I think people like it, partially because you absorb knowledge a lot faster when someone teaches you than if you are expected to osmose it.
Right. I think the personal touch makes a huge difference because the individual is going to remember that you cared enough to sit down with them, and it's going to leave an indelible impression on them that they will truly never forget. It makes leadership much more accessible. What's a personal discipline that has an outsized return on your leadership effectiveness?
For me, physical, it'll be funny, but physical exercise, because it just helps center me emotionally. It makes me more physically and resilient to stress, number one, so that I can handle more stress. But secondly, like when something's going wrong, running, running, I run, but like any sort of physical activity just helps me reset, saying like, look, I'm alive, life goes on, I can make rent, my kid's alive, like.
Right. Exercise is a huge stabilizing factor for me as well. I can't imagine life without it. And it makes a day so much easier to deal with when I'm able to start it on the right foot. What are you currently working on to improve in yourself as a leader?
I think two things. Number one, especially as we're kind of growing a reasonably new business, we're about 2-3 months in business right now. So number one is I'm having to learn how to be a better salesperson and to listen more to potential customers because we're early in our days. So that's number one. And number two is my business partner and I have very much bought into kind of AI is going to change the world. We don't know quite how, but it's going to change the world. And so we're also investing a lot in technical skills to learn these technologies better because we think that the leader of the future is going to be very different than the leader, the CEO of the past that you see in movies, boardrooms wearing suits. So we're trying to learn what AI means for kind of leaders of the future and how that changes workflow in a pretty fundamental way. And again, we're not sure where it's going to land, but we know it's going to make a difference and we want to be part of that. We don't want to be left behind.
Mm-hmm. Definitely. You shared that you're a calculated risk taker. What's your decision criteria? Have you had winners and lessons in the process?
My decision criteria, I think, boils down to two things. Number one, is this a adequate return on risk? So when you take a big risk, you should get a big return, and there's some math behind it, but let's ignore the math. It's just, am I getting adequate payoff for taking this risk? That's number one. And number two, there's called path dependency, which is like, what happens if things go wrong? Can you still stay in the game? So like a fun example is if I can bet everything I have for a chance at winning $1 billion, that might be a good risk-adjusted return. But when I lose everything I have, I'm homeless. That's not a good bet to take, even if I could, even if the math says it's a good mathematical bet. So those are the two principles that I apply both to my personal and professional life. Number one is this a good bet to take based on an expected value basis? And number two, does this create a path dependency where it, like, if things go wrong, it fundamentally removes my ability to stay in the game and take the next bet?
Mm-hmm. I definitely would not want to lose it all. That would not be a bet I would ever take.
Exactly. And you shouldn't, right? Like almost all where you bet the farm, for lack of a better word, are bad bets.
They're
right?
bad, generally speaking.
I play poker pretty competitively, and I once did the analysis of like all these all-in hands, and turns out they're actually just bad decisions, right? All-in hands are almost always bad decisions, despite what you see on TV and what you see in movies.
The numbers behind it and your experience in living it shows you that they don't work.
Correct, right? Because even if they like on average you win, you don't get to play on average if you're out of the game. On average only works if you can show up tomorrow. If you bet, if you play Russian roulette, it doesn't matter 5 times out of 6 you're going to win. The 1 time out of 6 you don't get to play the game tomorrow, and that's bad.
When you look at these functions, are you mapping out the desired processes that you can automate across the entire function?
No, not really. I think there's some technology companies that are trying to do that where they're creating, let's say, the AI HR person or the AI accounting person. We're taking it a different way, saying rather than using AI to replace what a human being already does, is there a better way to build the process from the ground up, right? So let's use an example. The way you would interact, let's go talk about finance for a second. The way you would normally interact with a great CFO is he or she is just looking at the numbers, and once in a while they would ping you and say like, hey, CEO or COO, this is going wrong with our business, or here's an opportunity. And that requires them to like get data from places, do some analysis, and think about specific questions or be asked specific questions. In kind of the way we're thinking about it is ignore that workflow process. Just throw a pile of data at it and let it just think. And just almost abstractly think in a closed room by itself. And it comes up with really cool ideas once in a while. So the same thing, we're not trying to rebuild the traditional human processes, because we think that you can just think about them very, very differently and rebuild and think without replicating the wheel, just cheaper.
What is included in the data set? Like, can you give a little more context on the data that would be included? Like for HR or
anything. So anything, obviously, ignoring for a second the regulatory and compliance burdens. For example, if you're dealing with healthcare, you have to think about healthcare privacy. But let's ignore the regulatory requirements for just a second.
Of course.
Our technology, and again, I don't want to overplay our technology because there's other people doing similar things with similar technologies. But these sorts of technologies, they can eat data of any sort that is domain relevant. So if you're talking about HR, you probably want payroll data, you probably want performance data, you probably want the resume and skill set of every single person in your company. Like, fun example, right now imagine you're an HR person in a company of 100 people. You're not thinking about every single person's skill set, resume every single day, right? It's impossible. But guess what? An AI or AI tool, a software tool can do that. And they can say like, hey, there's this job opening over here that Mike in warehousing doesn't know about, but it's actually perfect for him because I'm thinking about his resume 24/7, right? So why am I hiring outside? Or by the way, I know Melissa's cousin is actually looking for a job and she'd be good for this. So we can just use an internal reference, even though Melissa's not going to refer her cousin because she doesn't know that her cousin's looking for a job. We do.
That's fascinating.
So again, all data is just numbers at the end of the day. Even words can be translated into numbers. And so technology like ours ingests data from whatever problem you want to throw at it, or whatever, I should say, not problem, but scope of human activity.
In your case, you're asking really good questions. That's the important part.
Not exactly. That's what we started by doing. And then we realized something simple. So we used to have a list of, let's say, 1,000 questions and say like, hey, is the revenue going up? Is the profit going up? Is the insurance policy there? Should they be worried about Chinese geopolitics? Like the list of 1,000 questions, the same way surgeons or pilots have checklists. And then we said, what if we could ask a more abstract question? Just how do we make our business better? And so that's what we do. Instead of the typical way people think about interacting with AI, which is asking it questions and asking it to do specific tasks, we've started just being open-ended, saying, help us almost like if you told an AI, help me become better. It's a very weird question to ask. And then you go a step further and say, make me better.
Yes, tell me what I need to do to be better.
Yeah, exactly. But you're just saying, make me better. Notice you're not saying what better means. It has to think about what does better mean. And then it has to think about what you are, right? So it has to think about how to make not Nick better, but you better. And then it has to think about how do I make, right? Like, how do I now make Sara better? So I figured out what better is. I figured out who Sara is. And now I have to figure out how to make her better. And that's a very loaded question. There's so much meaning and layers of meaning in there. And yet that's the way really kind of people should move in the AI native world.
And you're seeing from the response, clearly there's enough detail there it's implementable immediately.
Exactly. And to be clear, there's some more technical engineering we're doing. We're not just asking better, prompts, right? That's part of it, but that's a small part of it. You want to, as you said, make it actionable, not abstract. You don't want to say, go meditate on a mountain. That's not very useful advice. It might be the right advice, but that's not very useful, right?
Well, it might be useful for your mindset and it might help you be a better person.
But you'd want to give more detail. If that's the right advice, the person would want to know why. Very few people are going to just listen to an AI that says, go meditate on a mountain for an hour a day. Unless it translates to, well, this meditation will lower your cortisol levels, which will lower your stress, which will allow you to make better decisions. And you won't yell at your kid in the evening because you're tired from work.
There you go. There you go. That's interesting. Thank you for taking me on that journey. When in the past, Nick, when you scaled your 3 companies, what similarities did you see across those companies?
I think on the positive side, they all tended to have useful products or services that somebody wanted to buy. That's really important. Whatever service or product you sell, if you're not selling something someone wants to buy, it's not a good business, right? And that could be burgers, that could be therapy, that could be soup kitchens, right? Whatever it is. You need to sell a service that someone wants to buy. So that's a common theme, and the infrastructure already existed. There were people, they were doing stuff, they were selling stuff, they were managing their costs. The 2 common kind of more constructive themes were, number 1, lack of data, observability. People didn't know what was going on in real time, like what's happening in my warehouse or what's happening on my e-commerce store or what's happening to my in my HR department. So that's number 1, discovering that there wasn't a lot of data visibility and analytics and building that in. Number 2 was decision-making was often based on either gut feel or whoever the most senior or loudest person in the room was. So what's called the hippo principle, the highest paid person in the organization, his or her opinion matters the most. And that's a bad way to make decisions. The right way to make decisions is you want to do 2 things. Number 1, you want to make decisions based on analysis, not feel, not based on charisma, not based on, the person's title or who their dad or mom is. Number 2 is, and this is a really funny one, you technically, if you're making decisions right, you actually don't make decisions. You buy options. So you never actually want to make a decision that commits you in stone. You want to buy the option or the right to make a decision that you can make in the future. So kicking the can down the road is actually the best decision-making framework if you can get it implemented contractually. And a practical example is there's a plot of land across the street, okay, that's selling. I don't want to buy. I may want to buy it and build a house there or move my family into a bigger house at some point. But if I bought it today, it would cost me lots of money. Instead, I negotiated with the owner that, hey, I'll give you $5,000 today, but you have to talk to me before you sell it to anyone else, and I have to have the right to match that offer.
Wow.
So anytime over the next decade, I have the option to buy that house. For $5,000 today, I've guaranteed that I will always have what's called a right of first refusal.
Right of refusal, sure. What I'm hearing tells me from your experience in scaling your 3 previous companies, you're applying all of those learnings in your current firm.
Yeah, so my partner and I are very pragmatic about we're building a business, we have a vision here, and then how do we do that most efficiently? How do we allocate our time, right? Mm-hmm. Like we had a funny discussion about, should we pay $10 for this piece of software? And then we stopped about 3 seconds in the conversation saying us discussing this for 10 minutes is worth more than the $10 on the piece of software. So let's just go buy it. And that $10 piece of software is actually going to save us about 30 hours a month at whatever our billing rate is. That's going to be thousands and thousands of dollars of savings by spending $10. That's obviously a good decision.
It's a good
And
decision.
so that's how we think about it. Even though it's $10 literally out of our pockets today, it's an investment that makes us, let's say, $5,000. That's a 50-to-1 payoff. That's what we should do. We should do all day long.
Most definitely. When you look back at the companies that you scaled, how were they different or unique?
I think they were different in a few ways. Number 1, industry, trucking, high-end men's shoes, software, very, very different industries. Number 2, by virtue of being different industries, you have different people and different personalities and cultures in those organizations. Trucking, you can imagine, is a very kind of blue-collar workforce. You have folks with different language backgrounds there. 90% of the workforce is working in a warehouse or in a truck or on heavy equipment. Compare this to a high-end shoe company, you still have a diverse group of people from an ethnic and age background, but these are people who are passionate about shoes, right? You don't work in fashion unless whether that be men's fashion or women's fashion, unless you care about fashion, right? Like,
of course.
So, the people were, even the people working our warehouse in the shoe company, they were dressed really well because this is what they cared about. They cared about wearing nice shoes and nice t-shirts in a way that, I perhaps care less about. And then in software, there was an emphasis on customer service and metrics because you can measure everything in software. So there's a culture much more about, hey, are we doing something right? And not just do we feel it, but do we see it in the numbers? Do we see it in our user figures? Do we see it in our customer retention rates? Do we see it in our engineering bug counts?
What is uplifting about the differences is that the workforce was reflecting the business in a way that they were living the values out in everything that they did.
100%, right? Like in trucking, people cared a lot about safety because like people can die if a stack of warehouses or crates falls over, right? In shoes, they were in the culture, right? They were much more active on Instagram. All of our employees had active Instagram accounts that they were posting about, their own fashion as well as following fashion influencers. They were involved, we were very active in the hip hop space because that was where a lot of our sponsors were. So they knew everything about what's happening in the hip hop world and news that this, rapper has beef with this rapper or this new album dropped. And in software, like we knew everything about new technology coming out every single day. People were passing on blog entries on AI or new JavaScript libraries.
What do you think was the most formative experience that you had in those three companies?
I think there was I'd been at one of these companies for about a year, and I tried to explain like, hey, here's how we make good decisions. I'd put it on paper and PowerPoints and given kind of town hall discussions on here's how you make good decisions. And it just wasn't getting through. And at some point we had an offsite and I did the exact same thing except on a whiteboard saying like, guys, this is why we shouldn't hold a conference. Instead of spending $50,000 on a conference, we should just spend that same amount of money. We should just spend on a fancy dinner or like Christmas party for us rather than for our clients. And that's actually a better business decision. It finally clicked to people that like, it wasn't about saving $50,000. It was just that use of $50,000 was a bad use. And having a big party is actually an okay use, which is funny because you wouldn't think about just having, a very nice dinner or Christmas party is a good use of company money. It actually is in certain circumstances.
It absolutely is when you can build a relationship and deepen it over time and just show your team how much you appreciate them.
Exactly. And the crazy thing is you can quantify that. All those qualitative feelings about building culture and retention and appreciation, you can put numbers to that. And when those numbers come out a certain way, you can say, yeah, let's go spend a bunch of money on holding a big Christmas party or Christmas bonuses or sending swag out to our employees, not even external customers. It won't drive $1 of revenue. And that didn't click for people until it was done in person on a whiteboard. And as someone who's kind of adapted to the remote first world, I think it made me appreciate that in person still has a very, very special place in how humans interact socially and how our brains work. That at least right now we can't replace.
Definitely. Nick, what's your counterintuitive view on authentic leadership and how do you define authentic leadership?
My counterintuitive view is not all forms of authenticity are actually effective. There's a fair bit of research saying that certain types of personalities are more successful in leadership roles. And it's not something somebody likes to hear. Like if you're a massive introvert, turns out introversion is very negatively correlated with success as a leader. It's tough to hear that your personality or mine may not be actually really effective in leadership roles because everyone wants to be a leader and it's kind of what you are, it's built up to that everyone can be special. And unfortunately, the research doesn't bear that out. There's specific types of personalities that succeed and that drive like leadership success. And there's others that like are going to be mediocre or subpar. So it's doing what you're good at and makes an impact to the organization. For me, I'm a math guy, right? At the end of what drives me in my personal and professional life is wanting to quantify and measure and do things optimally. Like I'm an engineer in my brain and heart. So for me, an authentic leadership is running a company like a machine where there's laws, there's numbers, there's inputs, there's outputs, and there's the ways that it should work and there's ways it shouldn't work. That's authentic to me. For different, there's other leaders who would have very, very different authentic styles, and I would not try to emulate them. And hopefully, conversely, they would not try and, pretend to be me.
Nick, what are you looking forward to in the next few years?
So I've got a 1-year-old. It's fun watching him grow up. It's a cool experience seeing a child develop and learn skills over time. I did not grow up around kids or babies, so this is a totally new experience for me.
That's great. That's great. Once you start seeing walking and big things with words, I think it will make your philosophical discussion about meaning even more important. And I very much look forward to seeing how your thinking progresses.
Well, I'm honestly worried about him. The reason it's keeping me up at night is it's nice to think about it in the abstract. I'm not sure what future, my kid's generation has. And a very silly example is, I spent a lot of years in school getting a lot of degrees and gaining expertise in areas. I don't know if anything beyond basic literacy will matter, right? The AIs are already doing better math than all except the top 1% of mathematicians. And that's today, not even 10 years from now. So what's the point of learning to read and write and do math and write poetry and music if something can do it better? Right?
Right. These are very deep questions.
Right? Does my kid need to go to high? Does my kid need to learn anything beyond third grade anymore? I don't know.
I would say something that makes them unique and different is highly valuable in terms of, not unique and different in terms of only one person that has a skill, but something that's economically viable, definitely makes it worthwhile. But this is a tough discussion for sure. And I know that you're not the only one that I'm going to have it with.
Yeah, it's a weird world we're entering right now.
For certain. Thank you so much for your time today, Nick.
Thank you for having me, Sarah. I really appreciate it.
Here are 3 key takeaways from today's discussion. Don't just automate, reimagine. Instead of simply mapping AI to current processes, Nick advocates rebuilding from the ground up, enabling smarter, more abstract thinking that leads to actionable recommendations and true business improvement. Democratizing great advice. AI-powered CFO tools are now delivering insights that were once exclusive to Fortune 500 companies, giving even small businesses access to advanced analytics, risk mitigation, and process optimization, often in just seconds, not hours or days. Calculated decision-making wins. Nick emphasizes the value of quantifying risks and continuously making positive ROI decisions, reminding leaders not to bet the farm, but build options and maintain agility for long-term success. If you're curious about how to future-proof your organization or simply want to hear brutally honest and pragmatic leadership advice, this episode is a must-listen. To my listeners, please consider leaving a rating and a review on your platform of choice, and share the show with a friend. Thanks so much for listening.